Chapter 12. Student Loan Issues. Let's look at 3 student loan issues: loans in default, delinquent payments, and student loans causing an excessively high DTI, debt-to-income ratio, including possible bankruptcy. First, it's important to know that not all student loans are being waived by the U.S. government. Some people have misunderstood headlines or politicians, so they expected that soon all student loans would automatically zero out and they would no longer owe anything. That is false. What happened is that investigations showed that there were private institutions who misrepresented their courses and employment opportunities to students. Those particular loans were forced to cease collecting money and the remaining debt was forgiven. In addition, some student loans, for people who meet certain qualifications, were canceled early 2024. Most of those who qualified were teachers, government workers, nonprofit workers, are medical workers, or are disabled. For updates, get your information from a reliable source, such as your student loan lender or a .gov site, not from someone spouting off on YouTube. If you skipped the previous chapter, you'll want to go back and review the information about the statute of limitations for student loans. Forbearance and negative amortization. If you, or someone you know, was granted payment relief due to the COVID pandemic or other hardship, listen up. You need to locate the agreement you received allowing you to skip payments during this grace period and read it meticulously. Many students were happy to receive a forbearance or permission not to make payments during a time of hardship, but they were unaware of the financial curse attached. Read your agreement to see if this applies to you. I'll explain. During the period of non-payment, the loan itself was not put on ice, only the payment. The interest continued to accrue. Thus, this new interest was added to the loan balance, causing the balance to increase every month. It has become interest piled on top of interest, until the loan is now much higher than it ever was. Now the student faces an even more arduous task to pay it off. For people who were in financial hardship due to loss of income, forbearance was their only choice. But for people who could afford to continue payments but thought they'd take a nice break and spend the money elsewhere, they did themselves a disservice. Now for another hidden trap. Some students were given a reduction in payment due to hardship or because their income was low. What they didn't realize is that their student loan has now turned into the toxic negative amortization loan, the same loan structure that took down so many American homeowners in 2007, 2010 and caused them to lose their homes due to foreclosure. Negative amortization occurs when your payment does not cover the entire amount due. Let's say your payment was originally $500 per month, but you got permission to pay half at $250 per month. They are not doing you a favor out of kindness. The unpaid $250 is added to your loan balance. Every month, the balance grows higher, putting you deeper in debt. Unsuspecting students have found themselves owing double what they originally owed. It's horrific. It reminds me of mafia maneuvers. Negative amortization loans became illegal for mortgages, but they still happen for student loans. If you don't know whether or not you are in a negative amortization situation, call your loan servicer and ask directly, is my loan now negative amortization? Is my balance going up every month? What did my balance start at and what is it today? Ask these redundant questions because servicers have been known to lie to people. Make them say it 3 different ways. If you discover your loan is negative amortizing, then you find out what your payment needs to be in order to pull out of that. If you don't know, ask the loan servicer. What does my payment need to be to stop the negative amortization and start paying down the balance? Then do the math and find out how long it will take you to pay off the debt. Do you have the financial ability to pay it off early? Take into account the interest rate, whether it's fixed or adjustable, and what your income is. Every person's financial situation is unique, so please understand I am not attempting to do any type of financial advising. I am educating and warning about a loan that continues to increase until you are choked to death financially. As I write, there are legislators pushing to make negative amortization illegal in student loans. I hope they succeed very soon so that this warning becomes outdated and unnecessary. Federal student loans in default. If you haven't made a payment on your federal student loan for 9 months and are not in deferment or forbearance, then the loan usually goes into default status. The consequences of this might be one of the following: your wages could be garnished without a court order. Suddenly, you notice that your paycheck is no longer what it was because funds are automatically taken out and sent to the lender. Your income tax refund or Social Security check could be taken and applied to the student loan. Your credit score will suffer when the non-payment is reported to the credit bureaus. You cannot qualify for a home loan while you have a federal loan in default status. Once payments are reestablished, then you can proceed with a request for a mortgage loan. Now for some awesome news. In the first book, Repair Your Credit Like the Pros, the chapter on student loans talks about a loan rehab program that takes 9 months to establish. That has now changed. As of June 2022, as soon as your application for the rehab program is accepted, you are out of default status. They will remove the default from your credit report and your score will improve as a result. This is fantastic! To take advantage of this new rehab program, call 800-621-3115 at Student Aid. They will create a personal plan for your financial situation and provide you with the necessary paperwork. When you have returned your documents, they review and approve, then clear the default status off of the Credit Alert Verification Reporting System, which is used by credit bureaus and mortgage lenders. This entire process can be completed in 2 months, or sometimes even less. Late payments. One recent late payment on a student loan could disqualify you from getting the best, a conventional loan to buy a home. I am sharing a story with you so that something weird like this doesn't happen to you, too. My client told me his credit was excellent, and it would have been if it had not been for the 130-day late payment that occurred within the last 4 months. He was completely taken aback by this news, because he had his payments set up on automatic pay. What happened is that the student loan servicing company sold the account to a different servicing company, so his automatic payment didn't get sent to the right place. When he discovered this, he called immediately. The representative apologized and told him the late payment would be removed, but it was never done. Consequently, due to his low score, his choices were to put buying the home on hold while he straightened this out or take a different loan program that would cost him approximately $7,000. Because he had found a dream house opportunity and didn't want to risk losing it to another buyer, he opted to pay the extra $7,000. I told him to get his credit report corrected and then come back to me in a year to refinance. He did that, but guess what happened? There was a brand new late payment showing on that same student loan, which prevented him from being to refinance into a better loan. The lesson is that you cannot take autopay for granted by assuming it is posting correctly every month. Stay on watch to protect your credit. If you did incur a late payment due to the loan servicer's error, then call and insist that they fix this for you by instructing the credit bureaus to remove the erroneous late payment. I suggest you inform them at the beginning of the conversation that you are recording it. At the end of the conversation, ask for the agreement in writing. Email is fine. Later, follow up to make sure it's done. For any erroneous late payment, send documentation, such as a bank statement showing the payment funds withdrawn, along with your dispute letter to the credit bureaus. You handle an erroneous student loan payment the same way as any other loan late payment, so refer to the previous chapters on late payments for instructions. Student loans causing too high DTI. One of the saddest situations is when a student graduates with $100,000 in student loan debt and then gets employment with a $30,000 salary. How are they ever going to pay off all that debt on that income? When the graduate applies to get a home loan, the loan officer tells them their debt-to-income (DTI) ratio is too high to qualify. Their student loan gets them stuck in renting. I had a client who graduated from college and was working. She had an agreement with the employer that after 5 years, the employer would pay off her student loans. She thought that the student loan payments, which were in deferment, would not count for her debt ratio, because the employer would be paying them off in another 3 years. That explanation failed to get her application approved. The reason is because there is no guarantee that she won't quit and go to work for a different company, and in that case, she would be responsible for the payments. The debt was close to $85,000, so I had no doubt she would continue her employment to get that obligation removed. Nevertheless, something could happen that might cause her to quit the job, and the underwriter cannot foretell the future. Now, for a serious warning. One of my colleagues received a loan application accompanied by a signed purchase agreement to buy a house. Everything looked good until the underwriter discovered student loans that did not appear on the credit report. The underwriter asked the loan officer, who in turn asked the borrower if the student loans belonged to him. "Yes," he said. "Why didn't you tell me?" asked the loan officer. "I was hoping no one would find out about them," he replied. This is criminal fraud. You cannot lie on a loan application by neglecting to reveal debt that belongs to you. Since no loan had been made, he incurred no penalty other than having his loan denied, but if the loan had closed and then if he had defaulted on the mortgage due to his inability to handle his entire debt load, we can expect that the lender would have proceeded with prosecuting him, per the law stated. Lenders are not taking losses without consequence to those who are responsible. A liar might find that their next house includes bars and guards. Declaring bankruptcy. I used to believe that bankruptcy could not be declared on a federal student loan. I have since learned that is not always the case. I am glad to know this, because sometimes bankruptcy relief is the most practical choice. The law allows for bankruptcy in situations where it is truly needed. When a person finds themselves in such a situation, especially when it is through no conscious fault of their own, then there is no shame in applying that law to yourself. This is from the U.S. government website, consumerfinance.gov. What is behind the perception that student loans cannot be discharged in bankruptcy? It is true that it can be more difficult to discharge many student loans than other types of unsecured debt. The bankruptcy code provides a more difficult test for relief, a showing of undue hardship, and an extra step in the process, an adversary proceeding, essentially a lawsuit within the bankruptcy. However, some borrowers may not realize that discharge is still possible even under that standard and extra step. Importantly, some loans that borrowers may think of as private student loans are not subject to that standard and extra step. Instead, some private loans for educational purposes can be discharged in a normal bankruptcy proceeding, just like most other consumer debts. For example, several types of loans associated with education expenses are dischargeable in bankruptcy, like most other types of unsecured consumer debt. These types of loans for education expenses are not subject to the more difficult standard and extra step. These loans could include, for example, loans where the loan amount was higher than the cost of attendance, such as tuition, books, room, and board, which can occur when a loan is paid directly to a consumer. Loans to pay for education at places that are not eligible for Title IV funding, such as unaccredited colleges, a school in a foreign country, or unaccredited training and trade certificate programs. Loans made to cover fees and living expenses incurred while studying for the bar exam or other professional exams. Loans made to cover fees, living expenses, and moving costs associated with medical or dental residency. Loans to a student attending school less than half-time. Loans where the loan amount was higher than the cost of attendance, such as tuition, books, room, and board, which can occur when a loan is paid directly to a consumer. Loans to pay for education at places that are not eligible for Title IV funding, such as unaccredited colleges, a school in a foreign country, or unaccredited training and trade certificate programs. Loans made to cover fees and living expenses incurred while studying for the bar exam or other professional exams. Loans made to cover fees, living expenses, and moving costs associated with medical or dental residency. Loans to a student attending school less than half-time. If you want to explore the possibility of bankruptcy, speak with a local bankruptcy attorney. An attorney will know about both federal and private student loan requirements. Many attorneys offer a free initial consultation to explain what you might qualify for. Unfortunately, you cannot give blind trust to the loan servicers these days. The Consumer Finance Protection Bureau has received a myriad of complaints about student loan servicers dishing out false information to borrowers inquiring about bankruptcy protection. Not only that, but these sharks have been known to continue collecting on debts that a bankruptcy judge previously discharged. Stay on top of your credit and your bank accounts to ensure that nothing is going awry. Coming up next, automobile repossession is a red-hot topic. Let's dive into that next.